Welcome to Legacy Money. For those of you that might be joining me for the first time, I'm Barry Page. In this video, I'm going to be talking about the elephant in the room, inflation. Now, I know you've been hearing a lot about inflation in the news lately. It's pretty crazy how that happens, but sometimes the news organizations are forced to really report what's happening. Unfortunately, many people are not watching the news lately because they view it as being negative, and they know that most of it is just a lot of propaganda. Now, I don't want to beat a dead horse, but I want to share some things with you that you might not hear about in the mainstream news or from any of the government, let's just call them cronies, that push government retirement plans and investments. Now, historically, the IRS has not tied inflation to taxes. So that way, the politicians can blame it on inflation instead of having to raise taxes. But inflation is the stealth tax. Now, recently, you may have heard Janet Yellen, the former Federal Reserve Chief and now Treasury Secretary, say that we're not in a recession. So think about that for a minute. We've passed 2 quarters, which originally was the definition of slow to no growth with our GDP. But you know they've merely changed the definition. And do you know what else is growing faster than the GDP? Social Security and Medicare expenses. You see, there's about 10,000 people retiring every single day. That means they'll be collecting Social Security and Medicare benefits. Now, this video isn't about Social Security and Medicare, but I want you to think about that. Social Security will affect everyone. Now, if you are going to be collecting Social Security and you want to use that as income during your retirement, you'll want to know that it counts towards your provisional income. So this will impact nearly everyone when they start taking Social Security during retirement. Let's just say that you're a married couple and you have Social Security income of $40,000 a year. Well, half of that, or $20,000, will count towards your provisional income. Now, if you have any other type of income, pensions, 401k, IRA income, then that also counts towards your provisional income. And so for the average couple, that's going to mean $200,000 to $300,000 of unnecessary taxes that you'll be paying during retirement, just during those 20 to 25 years of retirement. Well, what else? Well, let's say you've had a nice big home for your family and now you're in retirement and you want to sell your primary residence and maybe downsize. If it has risen at the rate of inflation, you may have to pay a capital gains tax. Now, there's a threshold, $500,000 is the current number, but that has not been adjusted for inflation since 1997. So if your home has increased in value, this would count towards your provisional income that year, the year that you sell your home. And then there's state and local taxes, SALT as it may be called. Inflation could put you in a position to pay taxes there as well. The $10,000 deduction may have to be adjusted. The Tax Foundation says 41 states tax wage income. At least 22 states have one index provision. This could be from tax brackets that don't adjust for inflation. Again, this is how the politicians play tricks with inflation and taxes. And then there's MMT, modern monetary theory. You can pay for everything through the Fed, just printing more money. And you know what happens when the Federal Reserve prints more money. That means that your dollars are worth less because they've inflated the money supply. That is inflation. When we print money for all of these government programs, we inflate the money supply. This is the root cause for inflation. And as we move forward, we will have to pay the interest on that debt. Currently, that's about $500 billion a year, or over $1.3 billion every single day we pay just in interest. Where will that money come from? Okay, so what can you do? The secret is to take control of your money now while you still can, and to get in the lowest possible tax bracket during retirement. You can't do that if you have an IRA, a 401k, or the like during retirement. These are government plans. The government has a plan for the money. If your income comes from tax-free vehicles, perhaps a Roth or permanent life insurance, you can avoid paying those unnecessary taxes. And you may still have a fighting chance. Now, a cautionary word on the Roth. It's still a government plan. And you know that there are many provisions that come along with the Roth. Not to mention that they're typically invested in the markets. So that means risk that you don't want to have during a retirement. You can learn more about tax-free income during retirement in my other videos, so be sure to check those out. Now, if you want to know how permanent life insurance can combat inflation and help you during a recession, this is what you need to know. First of all, permanent life insurance protects you and your family or your business during rough times. In the worst case scenario, death, disability, or the need for long-term care. Permanent life insurance is guaranteed to increase every year as long as the premium schedules are met. Permanent life insurance allows access to the cash value on your term. Think emergencies, job loss, disability, sickness. How about opportunities? We all know that more millionaires are made during rough times like a recession than any other time. How about those too good to be investments that come along once in a lifetime? Perhaps you've retired or you're going to retire and you want to just consult or maybe start your own business. Well, you're going to need access to capital. Permanent life insurance can provide tax-free cash flow now and during retirement. Permanent life insurance can also be used for infinite banking. You'll want to check out my other videos on infinite banking. But just realize that other people will need access to capital. So what if you could loan money to others, possibly in a business situation, real estate, or for investments that you might want to have yourself? Or perhaps you just want to loan money to others to help them out during these tough times. In summary, inflation and taxes are related. As inflation rises, your dollars are worth less. You need to have something to help you during these rough times. They are coming. So if you want to combat inflation, contact us to learn more. So thank you for joining me today. I look forward to seeing you in the next video.